Apple, Amazon, Alphabet have posted weak quarterly earnings. A drop in advertising revenue and a slowdown of consumer spending has led to a cautious growth outlook for the top tech companies. Shilpa standing by with the fine print of the big tech numbers. Shilpa.
The weather's gloomy in the big tech world. A day after an earnings miss from Meta, the three big A's, Amazon, Apple and Alphabet too, reported disappointing earnings for the October to December quarter. Why? The COVID impact continued, inflation is forcing consumers to spend less, and companies are advertising less and are investing lesser in cloud. Take Apple, for instance. The iPhone maker reported its first revenue decline since 2019, and its profits also fell 13%. Now, Apple attributed this to a challenging macroeconomic environment, foreign exchange headwinds, and the supply of the iPhone 14 and 14 Pro Max being impacted by the China COVID situation. Then there's Amazon, which reported its first yearly loss since 2014. Now, this quarter, being the holiday season, is usually huge for the company. But online store sales fell, and the company gave a guidance that was lower than expected and said that it expects slower growth rates for the next few quarters. Why? Like I said, consumers are cutting down on discretionary spends. Its cloud arm, AWS, which is actually Amazon's profit driver, also saw a slowdown. And the company also incurred costs on employee severance. And finally, Google's parent, Alphabet. Not a great picture here as well. The net profit fell for the fourth consecutive quarter, and this was on the back of revenues of the Google search engine and advertising falling as advertisers pull back spending and the global macroeconomic climate. Now, dark clouds over the big tech will continue, with these companies warning that the slowdown will continue in the next coming months as well.
Shilpa, many thanks for joining us. That's the big tech report.